Welcome back to the channel. I am James, and today we are looking at Pfizer Inc. ticker symbol PFE. Last night they released their earnings for Q2 of 2022, and we're going to be going through some of those numbers right here today. Then I'm going to look at my stock valuation spreadsheet to give the fair value of Pfizer based on these updated earnings using discounted free cash flow model and the Buffer-Graham intrinsic value models. More about that in a bit. If you're interested in the sheet, check my Patreon. And finally, we're going to be looking at some technical analysis on Pfizer because you guys are often interested in that. So what's happened with the stock price? Well, it is currently $51.75 a share. Market didn't react too strongly or negatively to earnings, but if we look at the share price over the last year, it's actually up 19%, much more than the broader market. If we just compare it to the S&P 500 right now, you can see that the S&P 500 is down 8%, Pfizer is up almost 19%. If we go over the last 5 years, they've been pretty neck and neck, but obviously Pfizer has had some strong rebounds at the minute because of what's going on in the world, and the S&P 500 struggled with it. So is this the right time to buy? That's the question I'm going to answer today. So let's get into the numbers right now. Interesting enough, Pfizer does not display their free cash flow. I looked at this document, couldn't find it. So we're going to use some estimations, but we want to look at the revenue. Firstly, 18.8 billion up to 27.2 for the equivalent in the second quarter. That is a massive, massive increase. And even then, if we look on the 6 months, 33 billion to 53. So revenues are up massively. And what about the profits? Well, we go to this line here, the bottom line, net income attributable to Pfizer Inc. common shareholders. So how do we get this? Well, it's revenue minus all the costs, minus taxes, and overall the profit for Pfizer was 5.5 billion in 2021, and that has gone up almost to 10 billion. So we can see they've generated about 9 million more in revenue. The cost of sales aren't even up that much considering, really. I mean, you can see here cost of sales up slightly, but everything else is relatively flat. So they've managed to be able to generate a lot more profit from even such a good amount of revenue. I mean, profit has nearly doubled. Revenue has gone up about 50%. Well, there you go, 78% to 47%. So that's very, very good for Pfizer. In terms of earnings per share, just to bring it up here, you can see that the earnings per share has increased 98 cents to $1.73. So overall, that is excellent as well. And then finally, we like to look at the shares of Pfizer buying or issuing more shares. And you can see here, they are buying back their shares. Not many of them, 5.598 billion. Down to 5.593 billion. So they are buying back their shares, but at a quite slow rate. Why is this important? Well, if there's 10 shares of a company, you own one, they buy back 5 of those shares. Very quick rate, obviously. There's now 5 shares. You go from owning 10% of the company to 20%, and you're entitled to more of these profits. So as I said before, they do not have the free cash flow in here, so we're going to do a bit of estimating, but let's quickly go to my stock summary sheet. We've got Pfizer, got the price, we've got the market cap. If we can see, we've got the PE, earnings per share, dividend yield, $1.60, which is quite a high, 3.08% dividend. And we've got the previous numbers here, 50 billion, 52, 50. You can see it's all steadily increasing. And we have the trailing 12 months, which I've added in right now, which is the previous 3 quarters plus the current quarter. Up about 25%, 100 billion in terms of revenue. Profit is up to 29, so a record year there. Free cash flow they don't have, so I'm going to be pretty conservative with the estimates, but let's just say if it increased another another 10%, let's go on the lower side. We'll go a bit higher actually. When we're there, 1 2 3 1 2 3 1 2 3. There's a lot of zeros here in there, so let's just say that increased slightly down. Actually, still that is from 2028, sorry, so that number actually needs to be higher because it needs to be increasing on the previous number. So let's just say they get a 30 billion in free cash flow, which is pretty much flat to where they were on the previous trailing 12 months. So we will then go to my Buffett, Graham intrinsic value and the free cash flow. And what does this give a valuation to stock? Firstly, we look at averages. We just average everything out and see what that gives us. And in terms of free cash flow, $150 a share, 15336, and this is just based on the averages. If we have a look at here, you can see that the average free cash flow rate is about fair. Revenue growth, I mean, you can see it's a bit all over the place. We're going to be a little more conservative on the revenue growth. Let's say they're only growing at about, well, they grew 20% in the trailing 12 months. Let's say they drop that and it goes to 5. So we're being a bit more conservative here. Net income margins, once again, Well, you could see that their net income increasing, but let's just go a bit conservative again, go to 25, and still that puts it at $128 stock. So massively undervalued based on discounted free cash flow model. Then we go to the Buffett Graham intrinsic value model. What does this take into account? Earnings per share, expected growth. So firstly, let's click on Yahoo Finance and see what the analysts are saying in terms of expected growth rate. They're expecting decreasing growth over the next 5 years, minus, well, almost 1%. So let me just add that in. And what does this give us a value? Well, the Buffett Graham intrinsic value does not like minus growth rate. So you can see it's currently got a fair value of about $35 a share, Graham price of 26. So for it to be fairly valued, we need to grow at about 1% a year. But because analysts are expecting minus growth, in fact, we'll just do the exact amount. It's our 0.8. They're expecting, based on this, the fair value is $37 a share. So free cash flow loves it. Buffett Graham intrinsic value doesn't like this stock. Personally, normally I like to look at an average of these, and this would put it somewhere in the middle, probably about fairly valued, but it's just interesting to show the massive discrepancies on the stock, which is why you want to take multiple options in looking at the valuation of a company. And this is with my free cash flow estimates as well. So finally, I just want to look at some technical analysis. You guys do enjoy these when I do them in or add them in. So firstly, what I like to do is look at the moving averages. The ones I like to look at are the 50-day and the 200-day. So let me just add these in right now. I'll add the 50-day in green because it's a shorter moving average, and I'll add the 200-day in red. And what we look for here is to see any price movement that is, are the lines providing any support or resistance? Is there been any death crosses? So we'll look over the last year, and you can see really, what am I seeing right now? Well, bullish signals overall. The price is above both of the major moving averages, which is a good sign, although it looks like it's about dropping back. The price has been consistently above it. There's no death crosses. There's no anything like that. The 200-day has acted as a form of resistance. When it has hit there, it's shot up quite closely. But you can see these lines are converging quite close together. The last time we saw this, when they crossed, was back in March of 21. And then the stock went on a hell of a run. So that's what the moving averages are saying right now. Then I like to look at the RSI, which is the relative strength index, is the stock in overbought or oversold regions. We'll go back to the year and look at that. It's pretty much in the middle. Now, if we look at previous times, if Pfizer is in the oversold regions, they've normally had a move to the upside. You can see quite a few drastic ones here. And when it's in the overbought regions, they have dropped down pretty consistently. But I would say if you're looking at RSI, wait for it to make a move and then buy or sell according on that. And then finally, we look at the MACD, which is the moving average convergence divergence. This is for picking up trends. And I'm going to guess we're going to see, yep, this is what we're going to see. So in fact, the MACD and signal line are crossing. It was in a bit of a short negative trend and is about to go to positive. But these have been very short trends once again. So if we look at the history, what's it done? That was a great trend, but that was October. Then you would have sold here. You would have missed out on some gains. Sold here. That would have been a great one again. So it seems the negative trends are more strong for Pfizer. But overall, right now, the MACD isn't really saying too much. It could flip-flop once again. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.